Welcome to CPA Australia's webinar, Integrated Reporting, Future Directions. My name is John Purcell and I'm Policy Advisor ESG at CPA Australia. We have people joining us from all over the country for today's webinar. I'd first like to take a moment to acknowledge the traditional owners from around Australia and pay my respects to elders, past, present and emerging. I extend acknowledgement to all Aboriginal and Torres Strait Islander people who may be joining us here today. I would like also to acknowledge Merrin Kelsall, President and Chairman of the Board, and CPA Directors, Dale Pinto, Victor Santi, Rosemary Sinclair, Helen Lorrigan, Louise Cox, who join us for this webinar. It is my pleasure to introduce our expert speakers for this afternoon, Liz Prescott, Michael Bray, Nicholas Diss and Emma Sweet. Liz is Senior Member of the IIRC Guidance, Research and Training and Services team, as well as Regional Lead Australasia, working to raise awareness and encourage adoption of integrated reporting. Additionally, Liz is Director on secondment from KPMG in Australia to the IIRC. Liz will present an overview of the processes and key revisions to the IR framework introduced in January this year. Michael is Director in Country Engagement of the IIRC, driving in-country integrated reporting adoption and integrated reporting assurance. Michael has been associated with the IIRC since its inception, including a member of the IIRC board from the period 2017 to 2020. Prior to joining the IIRC management team, Michael was Director of KPMG Australia's Better Business Reporting Services between 2016 and 2020 and an audit partner of KPMG Australia between 1989 and 2016. Michael led the global development of KPMG's Performance Insight Service to assist clients in improving their corporate reporting and corporate reporting management systems. Michael will discuss developments in integrated reporting assurance and importantly provide an introduction to the Value Reporting Foundation. Nicholas has more than 20 years experience in finance and business. He's responsible for finance, administration, planning and risk procurement and property, external reporting and partnering and insight functions for CPA Australia. Nicholas is also a CPA. Emma has more than 25 years experience across business sectors, working in both Australia and the United Kingdom in the music and tourism industries before joining CPA Australia. Emma reports to the CFO and is responsible for member research and development and production of our integrated report. Nicholas and Emma will jointly present on CPA Australia's own integrated reporting journey with a particular emphasis on the evolving application of assurance. Emma and Nicholas's presentation will be followed by comments from Julia Bilyanska, Director of Sustainability and Risk Assurance at KPMG. It's now time for the session to commence, so it's my pleasure to hand over to Liz.
Can you hear me, everyone?
Yep.
Thank you, John. Well, thank you, and thank you to everyone who's joined on the line today. As John mentioned, I'm going to be providing you with an overview of the revision to the International Integrated Reporting Framework before we look at an example of a company reporting against the revised framework. Please use the chat function as I present for your questions, and we will try to get through as many of them as we can at the end of the presentations today. Next slide, please, John. Before we get to the substance of the presentation, which is key updates to the original 2013 Integrated Reporting Framework, I just wanted to touch on some of the features of the underlying revision process. Over the course of 2 consultations, which collectively spanned 120 days, we heard from individuals and organisations across 55 jurisdictions. We held 25 virtual roundtables around the world through the support of our partners such as CPA Australia, who hosted events on our behalf. Through these roundtables and online surveys, we received almost 1,500 responses and contributions to the process, which reinforced the momentum for integrated reporting and strengthened our commitment to a market-led approach. Finally, our independent integrated reporting framework panel members logged some 350 hours collectively to review market responses and consider the implications for the framework. So how was their time spent? Next slide, please. Framework panel members focused on 22 issues raised by the market, 7 of which were considered significant, meaning that there was a real or perceived conflict or likelihood of misrepresentation. And then there were 15 minor suggestions which related to points of clarity, emphasis, or individual preference. After considering the various options and their implications, the framework panel agreed on a series of amendments to the framework, with those amendments generally falling into 3 categories. First, providing greater clarity to users of the framework. Second, simplifying matters for report preparers. And finally, driving improved quality in integrated reports. And we'll return to these themes of clarity, simplicity, and quality in a few moments' time. Next slide, please, John. In terms of due process, on the IIRC website, you'll find a series of documents for the questions raised in the consultation draft. Questions 1 to 10 related to issues that were considered as part of the revision process. Questions 11 to 15 related more to strategic considerations for longer-term consideration by the IIRC. In relation to questions 1 to 10, there are 3 documents. Firstly, the actual responses received during our 90-day consultation period. Second, a statistical analysis of feedback received, as well as illustrative quotes from survey respondents. And finally, the 22 issues that were raised by market respondents and how the IIRC treated these issues. For questions 11 to 15, there are 2 documents. Firstly, the market responses received during the 90-day consultation, and second, an analysis of that feedback received. Next slide, please. I mentioned that the framework enhancements generally fell into 3 categories, and we'll look at the first one, providing greater clarity. The revised framework better distinguishes between business model outputs and outcomes. And this is an aspect of reporting that's sometimes lacking in integrated reports. So we've better tried to clarify the distinction, in part by ensuring that both terms are defined in the body of the text and not just in the glossary of terms. This is a simple but hopefully impactful change to paragraph 4.19. A second and more substantive change to paragraph 4.19 involves the addition of a new illustrative example. The example is simple and by no means exhaustive, but it links the concept of outputs and outcomes to a real-life example. We also strengthen figure 2, which shows conceptually how an organisation creates, preserves, or erodes value over time, and the factors that influence that process. The diagram uses graphic design features to more clearly differentiate outputs from outcomes. And we've isolated just the business model segment of figure 2 here. And if we look at the next slide, we've used different colours and shapes to make the point that outputs and outcomes are in fact different concepts. And while we were at it, we took some additional market advice to ensure that the way we illustrate outcomes matches the way we define outcomes in the glossary of the framework. The definition of outcomes in the framework is the internal and external consequences, positive and negative, for the capitals as a result of the organisation's business activities and outputs. So whereas the previous diagram had a linear representation of the business model with inputs leading to business activities, then to outputs and outcomes, the revised figure 2 shows that outputs can directly affect outcomes. And now, this was an interesting observation, and we hope that it's now captured in the diagram with the 2 green arrows. And I do apologise for the background noise. I hope it's not too distracting. Finally, this portion of figure 2 reminds preparers that outcomes should be considered not just in terms of the short term, but also in the medium to long term. Next slide, please. Staying with the theme of clarity, the revised framework addresses some recurrent governance-related queries we've received over the years. We clarified the scope of the term those charged with governance to reflect that in some cases, an organisation's governing body includes its executive management. Now, this interpretation is consistent with definitions found in assurance standards, and several respondents noted that they were pleased with this move to better align with those standards. A newly added paragraph 1.22 reminds organisations, regardless of their governance model, of the intent of the Statement of Responsibility for the Integrated Report. Paragraph 1.22 also offers additional guidance to those businesses with 2-tier boards. We also removed the required commentary on the governing body's application of its collective mind from paragraph 1.20. The term has long confused report preparers, and on that basis, it's highly subjective. So we removed the terminology. And in fact, we removed the required commentary altogether because many survey respondents considered it redundant. Next slide, please. Shifting gears to simplifying matters for report preparers and starting with the required Statement of Responsibility for the Integrated Report. By way of context, aside from South Africa and select other jurisdictions, we've seen relatively little take-up of this requirement. So we actually explored replacing it with a different voluntary approach. But this proposal received pushback from market respondents, including both users and preparers of integrated reports. There was concern that the quality of integrated reports might suffer. With this in mind, we worked within the construct of paragraph 1.20 to simplify matters without sacrificing the goals of instilling accountability and fostering credibility and trust. We did this in 2 ways. We removed the second half of the requirement. Excuse me, I'm just going to move to another room. I beg your pardon, there's a lot of outside noise. Sorry. I beg your pardon. Oops. Sorry, everyone. There was concern about the quality of reports might be affected. So what we've done is we removed the second half of the requirement, which called for a commentary on future plans to phase in the Statement of Responsibility. We also acknowledged more explicitly that integrated reporting is a journey. And this may sound cliche, but it's a fact that organisations adopt the framework's requirements over several reporting cycles rather than just in 1 year. So paragraph 1.20 now indicates that organisations needn't be perfect to apply 1.20. In addition to these more substantive content changes, we've also looked at the framework's user friendliness. For those using a soft copy or electronic version of the document, you'll find more hyperlinks to glossary defined terms, and you'll also find it easier to navigate to and from related content. And the icons at the top of each page, as shown on the slide, make it easier to flip from page to page. We've shifted the general reporting guidance to its own section, and overall, you'll see we've gone with a cleaner, more modern look to the document. Moving on to the next slide. The third class of framework enhancements relates to the quality, credibility, and integrity of reported information. The first step in our approach was reinforcing the need for balanced disclosures. This means acknowledging and communicating scenarios in which value is eroded or simply preserved, rather than created. So we've dealt with the inherent bias of the term value creation by more frequently and more explicitly referencing value preservation and value erosion. And we did this at a strategically appropriate place throughout the framework, rather than just a blanket search and replace approach. Next, and very much relatedly, we wanted to encourage preparers to communicate negative outcomes along with the positive. Of course, this encouragement always existed in the framework, but we've intensified this encouragement in paragraphs 4.19 and 4.20. On the lower left of your screen, you'll see that an example specifically addresses both positive and negative outcomes by referencing their effects on the capitals. And on the right side, you'll see the now familiar segment of the business model. Here too, we remind preparers of the need to consider negative outcomes or consequences in addition to the positive. Next slide, please. Staying with the quality theme for a moment longer, we've reinforced the importance of robust reporting by encouraging supplementary disclosures on the reporting process itself. The rationale for this being that it offers insight into the integrity of the process. And you'll find this in the newly added paragraphs 1.23 and 1.24. Next, the framework reminds report preparers that disclosures are most effective when they include qualitative and quantitative information, or narrative along with indicators or metrics. The indicators provide support or evidence as well as a basis for comparison, and the narrative provides important explanations and context. And both of these efforts support internal audit functions and third-party assurance engagements. They also provide greater comfort to governing bodies in providing the statement of responsibility for the integrated report. So I've shared some of the headline enhancements to the framework, and these are enhancements that reflect, as I said, the needs of both users and preparers of integrated reports. There are some other tweaks which range from purely cosmetic to including terms such as purpose, which have become more pervasive in business settings. But the changes do largely fit into the categories of improving clarity, simplifying adoption, and enhancing quality. Now, to bring these changes to life, we'll quickly look at the 2020 integrated report of Nedbank, which is South Africa's fourth largest bank. And they have reported against the January 2021 version of the of the framework. On pages 2 and 3, you'll see that Nedbank set out a helpful overview of the process followed to develop their integrated report. And on the next slide, we'll drill down into the detail. Next slide, please, John. Thank you. So we see that Nedbank present a visual flowchart to map from their purpose through integrated thinking to deliver on their purpose, and also through the integrated reporting process itself to delivery of the integrated report. The flowchart also reflects the level of board and executive involvement throughout the process to deliver the integrated report in accordance with the new paragraphs 1.23 and 1.24 of the revised framework. Also on these pages, Nedbank discuss how they think about value creation, preservation and erosion within the organisation. And they also present icons to tie these concepts to the presentation of their business model. They also discuss how they consider materiality and material matters. And if we move to the next slide, these extracts of narrative text from pages 2 and 3 talk through the integrated reporting process, the process followed to complete the integrated report, and the measures taken by Nedbank to ensure the integrity of the integrated report. Finally, Nedbank meet the requirements of paragraphs 1.20 and 1.21 of the IR framework by including a statement by the board which acknowledges their responsibility for ensuring the integrity of the integrated report, and also that it's been prepared in accordance with the 2021 edition of the integrated reporting framework. Moving to the next slide. And apologies for the clarity, but just to give you an overview, Nedbank on pages 10 and 11 of their 2020 integrated report present a comprehensive overview of the inputs, business activities, outputs, and outcomes of their business model. As I mentioned, they use icons to denote value creation, preservation, or erosion for each of the outcomes on the right-hand side of the visual for all 6 capitals, as well as identifying which stakeholders are impacted by the various outcomes. So I do encourage you, there is a web link on the page and you will be receiving a copy of the slides. I do encourage you to visit Nedbank's report as a good example of someone reporting against the revised framework. And if we move to the next slide, before I finish, you will be hearing more about the intended merger between the IIRC and SASB from Michael, but I would just like to draw your attention to some resources available on the IIR website. Recently, the CEOs of both the IIRC and SASB held public webinars to talk about strengthening your integrated report using the SASB standards. There is also a detailed blog available to discuss this topic, so I would encourage you to take some time to have a look at these resources. So thank you, and Michael, over to you.
Good afternoon to everyone. As Liz said, I'll be speaking mainly about integrated reporting assurance, but it would be remiss of me not to say something about the formation of the Value Reporting Foundation. John, if you could go to the next one, please. Particularly given that the formation of the Value Reporting Foundation is now less than 2 weeks away, the culmination of a lot of work. So the Value Reporting Foundation will be the merger of the International Integrated Reporting Council and SASB. And what I wanted to do is just spend a couple of minutes talking about some of the features of the Value Reporting Foundation. Next one, please, John. So we will be one global organisation with a unified strategy and 3 principal products. The first, integrated thinking principles. The second, as Liz has just taken us through, the International Integrated Reporting Framework. And thirdly, SASB standards. We will advance a simplified corporate reporting landscape. We will bring together our existing frameworks and standards. We'll provide active support to achieving the ambition of a global sustainability standards board under the governance of the IFRS Foundation. Next one, please, John. So, overall, what's the value proposition? Well, it's going to simplify the field. It will globalise two very significant organisations. It will focus on reporting as a means of improving decision-making by companies and their investors. It will advance the adoption of integrated thinking, integrated reporting, and SASB standards in an integrated manner. And it will accelerate progress towards this comprehensive corporate reporting system, what many would call the end game. Next, please, John. So this diagram is being used by the CEOs of the IIRC and SASB to show how together in an integrated way, we will have a robust tool set to support holistic decision making. So we've got these integrated thinking principles operating with the integrated reporting framework and SASB standards, and SASB inside means organisations which are actually really adopting SASB standards. So it's about communicating with a common language, a shared understanding of value and how it's created, preserved or eroded in the way that Liz has emphasised in her points about the revised framework. Next, please, John. But I said that I'd like to spend most time today on integrated reporting assurance and, for me, in enabling high quality integrated reporting assurance. So I'm going to work through the working definition of integrated reporting assurance, but then move through where we are today, where we need to get to, how we can get there, and what the next steps envisaged are. So this is a very carefully expressed definition of what integrated reporting assurance is. It is assurance expressed in terms of an integrated report being in accordance with the integrated reporting framework. And that's to be distinguished from assurance only on metrics required by SASB or GRI standards in an integrated report. So the key thing there is this holistic description of the business that I'll return to. So the diagram in the paper that's recently been published by the IIRC and IFAC is where I'll get to in this discussion, but I will start from where we are today. And where we are today is that we do have an international standard on assurance engagements, IS 3000, which is the backing for many of the instances of integrated reporting assurance that exist today. We also now have the IIRC's extended external reporting assurance guidance with a very specific integrated report example 10, which was released in April. Where we need to get to, we believe that it's about widespread adoption of integrated reporting and reasonable assurance of those integrated reports. So in terms of getting there, today's instances are all limited, with one exception that's gone a bit further, or a combination of both for different subject matters in the integrated report. Next one, please, John. I'll come to the diagram on the right in a moment, but on the left are the 7 known instances of integrated reporting assurance that exist in the world today. The pioneer was ABN AMRO in the Netherlands. The second was the IIRC itself. The third and fourth were Australian instances, CBUS and CPA Australia, and you're going to hear about the CPA experience in a few minutes' time. The next one was Cipla in India, and then Petronas Chemicals in Malaysia, and finally SoftLogic, a life insurance company in Sri Lanka, had its report assured, and that was released in the last 6 weeks or so. And as I mentioned, we do have guidance. This is mainstreaming through the IIRC's extended external reporting assurance guidance. ABN AMRO, being the pioneer, as you'd expect, has gone one step further. It's actually taken that next step towards reasonable assurance by having reasonable assurance delivered on its materiality determination process. Next one, please, John. So the diagram starts with where we are today. And as it works across it, we're coming off this moving from incremental assurance to limited integrated reporting assurance. And we do have chapters in that guidance as well as the example on quantitative and forward-looking information. As I said, the end game is the right-hand side of the diagram, reasonable assurance, which is where we believe that will really help the market in terms of greater trust in reporting and the businesses themselves, confidence in the assurance and understanding of what it is, greater value to users, and ultimately less risky for those providing the assurance. But the bridge is more significant than that bridge between limited and reasonable assurance in financial statement auditing. And just have a look at the top and the bottom arrows in that diagram, because what that's trying to draw out is that whereas the financial reporting process is something that is out there that lets financial statements get prepared, in an integrated report, you've actually got a report on the value creation process. And the value creation process includes the governance, business model, and approach to risk and opportunity management. And if you think about a business model, it's comprised of a series of processes. So you'll be reporting on key business processes in the integrated report, and the assurer will need to be getting comfortable in a reasonable assurance engagement that those business processes actually work in the way that they're described in the integrated report. So just think about how this sort of assurance evidence is going to be obtained. And if you're talking about the governance process, you're talking about the boardroom. If you're talking about the strategic management process, you're talking about the C-suite. And a very important process, we believe, is the integrated reporting process itself. And it should be reported upon in the integrated report, which ties up very nicely with the process recommended disclosures that Liz spoke to in the revised framework. Critically important in this area of integrated reporting assurance is the basis of preparation and presentation that is required by paragraph 4.41 of the revised framework, because it will explain how all of this comes together in terms of the frameworks and the metrics and so on. So just thinking about that, have a think about those audit evidence gathering implications. John, next please. I often get asked about, well, what are the unique challenges and opportunities of integrated reporting assurance? And I try to do it through this slide. And these unique opportunities and challenges on the right-hand side flow directly from the distinctive contribution of integrated reporting itself. And Liz has touched on these things. The integrated thinking, foundation of integrated reporting, in my language, better business practice. The narrative description of the business, in my language, it's what, with, how, and why. The what being the purpose and the strategy, the with being the capitals, the resource and relationships, the how being the business model, the governance, and so on, and the why being how the organisation is better at using its with and its how to realise its what. And it's this multiple capitals focus of integrated reporting. And it's the fact that it's primarily for investors, but of interest to all stakeholders. And I've already mentioned the basis of preparation and presentation. What are material matters? How are metrics which are not required by sustainability or financial reporting standards self-determined because they're business critical, for example, in relation to metrics. And then all metrics that are required by these standards will not necessarily be material from an integrated report's point of view. And integrated reporting is a process founded on integrated thinking. So it's not just about the report, it's about the reporting strategy, process, portfolio, and so on. And it's not even just about the reporting, it's about the business management controls over strategic management and governance, which are reported on in the integrated report. That brings these unique opportunities and challenges. Most of the assurance guidance that we have in existence to date is in the nature of measurement, in relation to measurement of metrics. But what integrated report is all about, assurance is all about, because of the importance of this description of the business, is evaluation of an assurance technique. The assurance practitioner has to be able to evaluate the reasonableness of the description of the strategy and business model and governance. Evaluate whether the business as described in the integrated report is really the true business as it's being practiced. And in a reasonable assurance engagement, it's going to be, are the investors ready for this sort of assurance? Can they use it? And that really comes to, because assurance readiness is assurance readiness. It's the same for limited or reasonable. The decision to go to reasonable will be one of return on investment for the organisation. And that's going to be through interactions with their stakeholders to make sure that they'll be able to use the reasonable assurance. And this goes to the rational purpose requirements of ISA 3000. And evaluating this basis of preparation and presentation, evaluating the design and operation of the integrated reporting process, evaluation of the design and operation of business management controls in other key business processes. John, next please. And so I'm not going to dwell on this one, but I've heard a number of reasons why we can't do integrated reporting assurance in the way that I've described it. But I really think there are answers to overcoming all of these barriers and challenges. And part of this is about giving the assurance profession confidence that they actually able to do this. And Julia, I'm sure, will talk to a couple of these things in a way when she speaks in due course. The one is there is no demand. Well, let me tell you that on a global basis, that demand is now starting to come through from investors as they're being educated on the value proposition for assurance. We don't have the skills. Well, I believe that financial statement auditors are ideally placed to lead these integrated reporting assurance engagements. They might need some top-up training and appropriate subject matter experts in the team. There is no guidance. It's happening. It will be too costly. It's not, but it is going to be on a business case basis. The engagement risk would be too high. The risks are manageable with the appropriate business understanding, assurance approach, training and accreditation. So we need to focus on the opportunities in these areas. And you as members of CPA Australia are in a position to really work to this. So I'm happy that these slides be available. I'll let you have a read of those things. But I would say to those of you that are assurance practitioners in the audience, be confident that you are quite well equipped to do this. I've been convening a task force of the Integrated Reporting Council for the last month or so, and because we're so close to the Value Reporting Foundation merger, we are developing a Value Reporting Foundation strategic position on integrated reporting assurance. And our discussions there are who are we going to collaborate with on the next iterations in this paper. There'll be one that comes out with the Institute of Internal Auditors in the next few weeks, but there's a lot more guidance that will be required, a lot more of these sort of papers that will be required. We'd like to work with CPA Australia, all of you, the accounting profession around the world, as well as organisations such as IFAC. And on the next one, John, the IIRC IFAC paper identified or made a request for feedback on the paper and areas that should be addressed in the future. And so Stathis Gould is the officer of IFAC that is happy to be receiving that feedback, and his email address is on that slide. So in conclusion, for me, integrated reporting assurance is necessary to the credibility of integrated reports. And so user trust of them and the organisations providing them. But the approach does need to be global in the interest of consistency, hence the Value Reporting Foundation's interest. It's happening. It's not something for the future. This is now, here and now. And we do believe that reasonable assurance is the value proposition where we would like to work to. So all of you involved in assurance, I just ask you to please get involved. And that's enough for me, John.
Thank you, Michael, and welcome to all on the call. My name is Nicholas Deason, CFO of CPA Australia. I'm going to give you, along with Emma Sweet and Julia Bilyanska, sorry Julia, apologies there, an understanding of CPA's experience with integrated reporting and its approach to assurance. So, John, if you could move to the next slide. So, as you can see here on this slide, CPA Australia has had a long history of reporting using different frameworks. So, all the way back to 2007, we actually delivered our first sustainability report. It was a standalone document using the GRI framework. And from the beginning, assurance was important to us as an organisation. We then continued using that framework and delivering our report in 2011, which was traditional financial statements and a sustainability report all in one document, which we felt was a better representation all in one place of our organisation and the value and the reporting to members and other stakeholders all in one place. In 2013, we moved to adopting part of the IR framework and continued to use that framework and develop iteratively over time. More and more of our report was meeting the requirements of the framework. In 2019, we chose to move away from the GRI framework and just solely use the IR framework. And that was fundamentally a decision by the board that saw that the IR framework better suited our needs as an organisation and allowed us to clearly articulate how the organisation creates value and what was material to stakeholders. And also then moving to 2020, where we've actually received limited assurance under the entire IR framework, which being only one of 8 organisations globally to have achieved that. If you could move to the next slide, John. So why did CPA land on IR and not some of the other frameworks available? I think at the high level, IR is very much suited to our business and our ability to tell the story to our stakeholders who are members, but there are others that are important to us. How the business does go about creating value for the long term. We found that the framework has allowed the business to think differently about how it does create that value. And over the last 3 years in particular, we have developed a strategy with our members that is very much interlinked with what they see as being value for them. It also is how we report on that strategy in our external reporting. Internal reporting is also aligned to that strategy. It also includes risk and how that is managed within our organisation. And we've also established a set of KPIs, and many of those KPIs that we measure are actually the views of whether the members, our key stakeholder, are seeing us creating value for them. And we report on that in our integrated report annually and also internally through to the board. As I said earlier, it does give us a much better picture on how we create value. So as CPA Australia, its purpose is to provide value to members. It's not a for-profit entity. So how do we do that, and how do we know that we're on track and we're delivering that value? So the framework delivers us guidance and allows us to apply strong thinking processes all the way from executive through to the board, and then that ultimately ends up in our report. You'll see there the second last point on the page is around the other sustainability standards. Now, there are many standards globally, and having used the GRI standard, it probably wasn't as suited to us as an organisation as the integrated reporting framework. And I think what I see other businesses doing is selecting the standards and frameworks that make most sense for them, but they can sit underneath the integrated reporting framework and allow the organisation to have an anchor to report on, and then it gives the reader of the report a clear guidance as to how they've come up with that information. But for us, the integrated reporting framework made the most sense and allowed us to tell the right story for our members and other stakeholders. You also noted on the previous slide that we have been doing it for a long time, and we do believe that it's important to move through the stages in a considered way. Trying to go from not doing any sort of sustainability reporting to doing an IR report with assurance is a significant undertaking, and you need to move through and understand what that's going to look like for your business and for your governance and your directors and what you will be reporting on. So it is a bit of a process or a journey to get yourself from not reporting under these frameworks to reporting to these frameworks. So if you could move to the next slide, please, John. So what do we see as the benefits for us? Fundamentally, assurance provides us the transparency and credibility. We think if a reader picks up a document that hasn't had an assurance lens applied to it, there just isn't that transparency to the level that if you've had the assurance performed. We see it also increasing the governance, and by governance I mean at a board level and a management level. So the insurance will come through and spend time talking to you about how you've undertaken that process, or collected that data. What's the process been for reporting that? How did you make those decisions? So collectively, the questioning and understanding of your processes and how they work within the organisation, as articulated in your integrated report, improves the governance over your reporting and ultimately ends up with a higher quality product for stakeholders. It also helps you to improve your processes. So with any sort of data collection and any assertions that you do make in your report, obviously these need to be substantiated, and assurance will give you that oversight and make sure that those processes are sound. So from that perspective, it's a bit like financial audit. We're all quite common and quite clear in how those work. Julia and the team at KPMG will bring that level of rigour through all of what's reported in the report, and test the validity of what you're claiming in the report. And it's also, I think, helped us take the next steps with integrated reporting. So as I said earlier, it's very difficult to go from not performing one to delivering one, and the assurance process every year helps us improve, and therefore the outcome is a better report, and also improved thinking within the board and within management to make sure that we are focused on the purpose of the organisation and providing value ultimately to members. So I will pause there and hand over to Julia, and she's going to talk you through the assurance approach for CPA Australia.
Thank you, Nicholas, and good afternoon, everyone. I'm Julia Bilyanska from KPMG. I've been working with CPA Australia over the last 3 years. And Nicholas, as you alluded to, we've very much taken a staged approach. So year one was all about readiness for assurance, really checking that the processes underlying the collation of information and the report stacks up against the integrated reporting framework, and the documentation is available to support the key claims. We then moved to year two, which was limited assurance in accordance with the principles in the IR framework. And in 2020, we moved all the way to providing assurance over the entire report being in accordance with the integrated reporting framework. So essentially the assurance covered the entire scope of the report in 2020. As Michael mentioned, we were very much guided by the ASA 3000 standard and all the principles underlying that when conducting our limited assurance work. But really what I wanted to spend a bit of time on is just explaining, well, what's involved? What do we mean when we say limited assurance, and what kind of work do we do? So what we do is really focus on, firstly, whether the report indeed aligns to the integrated reporting framework. We look at the draft report and we look to the framework. And when I say framework, it's covering both the integrated reporting principles and also the content elements. And we compare the draft report with the framework, and we work with Emma and Nicholas and the team to make sure that we can really see that all of the content elements have been embedded and all the principles have been thought through. Now, it is a journey, and Liz alluded to that in her presentation, and the interpretation is the framework is being interpreted to be fit for purpose for CPA Australia. And therefore, over the last 3 years, we've made sure that we can really satisfy that is the report incorporating all of the requirements of the framework, the principles and the content elements. But there is always improvement opportunities and developments as we progress through implementing the report. over the years. But this year, CPA Australia has received a clean limited assurance report from us. So very much being in accordance with the framework is a primary focus, and we start with that. But we also look to make sure that there are underlying processes for collation of the information, and that the information presented in the report is really reflective of the way the business is run and the strategy is implemented. So what do? We run interviews and seek written representations from the executive team, the management, and the owners of the content, those people in an organisation that compile both the data and the narrative that is presented in the integrated report. And it covers all areas from governance to strategy to key performance indicators and targets and the analysis of their achievement, and also the processes and policies that are used to manage and report on the information that's presented. We also agree that information in the report to relevant underlying documentation. We do it on a sample basis, but we do very much look to agree to make sure that there is substantiation available for the information and the data that's reported on. We look at some of the key metrics and we perform analytical procedures over those to make sure that there is integrity in the data that is presented. We'll also look at how CPA Australia describes the key concepts like the strategy, like the governance processes, like the performance during the year, and we compare and contrast it with firstly, what we read in the board minutes, and also what we hear from our interviews with various levels of management as we progress through the assurance engagement. We also make sure that we look at the completeness and the processes that are underlying the compilation of material issues, because those the material issues are really driving the information that's embedded through the report. So we'll look at the processes that CPA Australia goes through to identify and engage with stakeholders to make sure that the material issues have been identified and prioritised, and then also flow through to being reported on in the report. And we also make sure that we read the report in its entirety and again compare it to the knowledge that we've obtained throughout our interviews, through reading minutes of the meeting, through validating the collation of material issues, where we also look to, for example, media analysis to make sure that all of the controversies or narratives that are relevant and material have been reported on. Again, this is a test of making sure that it's not just all the good news, but like Liz alluded to, it's the positives and also the challenges that are being reported on to present a comprehensive and complete picture. Hopefully that gives you a bit of an insight into how assurance is performed, and I'll hand over to Emma to really talk about the practical applications of what's involved.
Thanks very much, Julia. John, if you could go to the next slide for me, please. So one of the challenges for us in wanting assurance over our report is in the early days, there weren't a lot of providers that were actually ready, I guess, to provide assurance under the framework. And as Liz and Julia have mentioned, that integrated reporting is a journey, and report preparers have to go on that journey. So too did the assurance partners. So that was probably an initial challenge. The other thing, not just for doing an integrated report, but particularly if you want assurance, is you need to ensure there's understanding of the IR framework across the business. So data providers need to understand what's needed for the assurance process, and you've often got data providers who've never really been used to an audit or assurance process before, so they're not as sure of what the robustness of that data should be. So that's really a constant education process as people join the business and people leave the business, but also when you're doing an integrated report, so for me, that's a very large part of my role and I spend a lot of time on it. But for some of my data providers, you know, it's a couple of weeks of the year. So they're not going to be on top of it all the time. So you really need to just keep educating people so that they can provide good data for the assurance process. And as I've mentioned, yeah, the robustness of non-financial data, particularly initially, can be an issue. For us, assurance also, it adds time into the process. So obviously when we're dealing with Julia and her team, that's a very thorough process, as I'm sure you understand. So there can be time pressures around getting the evidence they need, when we need sign-off and when we need to sign off on the design. So it's really important there that you've got really clear timelines and you're communicating very clearly, not just between you and your assurance provider, but also between the people in the business that you're going to be relying on to provide that supporting evidence. To your assurance partner. And obviously assurance does come with a cost. For larger companies, that may be more significant than it is for us, but in our view, the credibility and trust that assurance brings, that Nicholas has mentioned, really does make the cost, well, we think the return on investment is high for that. So if I could ask you to go to the next slide, please, John. In terms of what we would recommend, not just in moving to integrated reporting, but also in looking at assurance, is it's really important that you have buy-in from the board and the executive. The earlier you talk to them and the earlier you get them involved, and the direction may often come from them, that they actually want you to get involved in this, then that's going to really be a key to success. And you may need to educate people as well. They may not be as used to the IR framework. So as I said, the earlier you get people involved, the better. And the board in particular will need to be across materiality and agree that what you've said is material for your business actually is what is material, because that obviously impacts your reporting because it's central to your reporting. So yeah, we would also then say materiality and the way you determine what is material can be a challenge, first off. It took us a long time to sort of work through how we might do that. So again, we would recommend doing that very early, and also make sure you are just reporting on what's material. Don't report on something just because you have the data. So only report on what is really material. As I've said before, you do really need to work with the business so they understand what they need to do as early as possible, and that they can provide the data that you're going to need for the report. And Nicholas has talked about us taking a stepped approach throughout our kind of reporting journey, and that has been really beneficial, whether it was doing practice runs when we first implemented GRI or moved from one version of GRI to the next, or when we then did move to IR, because it really helps build confidence, not across the business and with your board or executives, that you can actually deliver on what you said you're going to deliver. So we would really recommend that approach. An example of that is, I think we started including a business model in our report in 2013, and it was an achievement just to include it. So it is quite difficult for businesses. They often won't have that model articulated. So you have to articulate it and get buy-in across the all levels of the business for that. So if I look at what we had in 2013 to what we have now, it's a very different business model. I don't think our first one would have met the framework. So I think just being able to take those steps before you do, move to the whole thing is very helpful, I think, for someone who's looking to prepare a report. But Nicholas, or Julia, did you have any more comments before I hand back to John?
One thing I would add there is that it's useful to engage with people who have gone through this experience, and obviously assurers have that experience, but there are also people out there like CPA Australia who have reported under the framework and have gone through an assurance process. And speaking on behalf of myself and Emma, we are more than comfortable to spend time with people looking at adopting the framework. And we do that quite often over the years. So that will give you a very good insight into how you might go about it. And whilst we've articulated a lot of that today, I mean, we're obviously happy to go into more detail if required. Is there anything else you wanted to add, Julia, before we hand back to John and question?
Nicholas, just very briefly, I very much echo your comment and wanted to add that early engagement, as Emma pointed out, with your board, with your assurance providers is really, really important, because coming at the very end creates an enormous pressure on the business if there are any changes or recommendations. So that early engagement is really key. I very much welcome and encourage that, both with your board, but also with your assurance providers. I'll hand over to you, John.
Thank you, Julia. And would certainly like to thank Liz, Michael, Emma, Nicholas, and again, Julia. It's been a very informative and super session for us. I'd like to throw it open to questions. So you have any, place them in the chat box, and I'll get our expert panel to start giving their views. So we do have a question from Dale Pinto, one of our board members, and it is probably one of the perennial questions around where corporate reporting is going. And the question is, many integrated reports are quite long. How difficult is it to reconcile conciseness and meaningful communication with stakeholders? So,
John, I'd be happy to have a
okay.
I'd be happy to have a brief go. Dale, this is a really excellent question, and it is indeed one of the key tensions. How do you keep it concise but yet meaningful? I think the brief answer to that is focusing on materiality. Like Emma said, don't just include the data because you have it. Think about what is material in the context of the framework and in the context of your stakeholder group. And then focusing on material issues and flowing your narrative through the report on material issues is probably my comment on that.
I might add to it, and it ties together assurance and the report. And I actually wrote an email on this to someone this morning because they were trying to understand the difference between a combined assurance model in South Africa and the integrated reporting assurance model. And the way I put it is that integrated reporting assurance is a good antidote, a good help to improve the quality of an organisation's integrated report. And I think Nicholas and Emma spoke to that a little bit before. But the three words that I put together, often on this one, it goes to where Julia was, is designated, identifiable and concise. And they are separate black letter requirements. Designated and identifiable is a black letter requirement. It's an other mandatory requirement. And concise is a black letter requirement. It's a guiding principle. But what designated and identifiable means is that you've got a defined starting point for your integrated report, where it starts and where it finishes. And because you've got that starting point and that end point, you can make a judgment about concise. But if I look at integrated reports in South Africa and Japan, there are none in those countries in accordance with the framework. Well, CPA's is concise. And the reason for that is that because they don't go identifiable and defined in those countries, by implication, the whole annual report, hundreds of pages of it, are the integrated report, including the financial statements. And so, by definition, not concise, not in accordance with the framework. So the choice to obtain assurance is going to mean that you're going to be held to account on those black letter requirements. So my shorthand for that is look for designated, identifiable, and concise, and you'll be moving towards concise.
Thank you very much, Michael. Just as a sort of follow on from that, question for myself, how much of these challenges will be solved or potentially be solved by technological developments?
I'm happy to say something on that.
Yeah.
I think one of the real remaining areas for improvement, and not perfection, but really good integrated reporting, is the guiding principle of connectivity. And I believe that we won't really crack connectivity without a technology solution. And it's not to produce everything, but technology can help with integrated reporting processes. It can help with integrated report compilation, but not the judgmental aspects and so on. But if we've got a technology solution, and they're being developed, that if we were speaking to India, they'd be talking about this. There is some technology out there that is experimenting with automation of as much of integrated reporting stuff as possible. I just believe it's really important.
Thank you, Michael.
John,
Yeah, sorry. Please, Julia.
Sorry, John, I was just going to add from a sort of a data accuracy perspective, I think technological solutions would be immensely helpful. And I probably speak on behalf of a number of report preparers that I work with. Traditionally, the financial information that you see in annual financial statements has been through automation and rigor for much, much longer than the data and information you see in integrated reports. Traditionally, we see spreadsheets and back of the envelope calculations and real challenge in that data coming together. And so technological solutions are absolutely the way to go in terms of improving the accuracy of the data and taking out manual data entry and manipulation, but also improving the efficiency for report preparers. So absolutely, technology is the way to go.
Great point, Julia.
Yeah, and also perhaps a follow-up question for you, Julia, from one of our board members, Rick DeSanti, is wanting to get your views as an insurance practitioner on the challenges of achieving reasonable assurance.
Thank you, Rick. Again, excellent question. Reasonable assurance is what companies get over their financial statements. So it's certainly very widespread in the financial reporting world, but not so much yet in the non-financial or integrated reporting sense. The difference, very simplistically, is that in the limited assurance, what we do is inquiries and analysis and a number of procedures to give us confidence in the report preparation being in accordance with the framework. Reasonable assurance is a higher bar, and we need to make sure that we then reach a positive conclusion as opposed to a negative conclusion in limited assurance space, a positive conclusion that the information presented is genuinely accurate. And so it's a higher bar, it's more testing. If we are testing, for example, people data, we will then need to sample enough of that data to reach a positive conclusion that it's accurate. Whereas in a limited assurance world, it's analysis and it's interviews and inquiries predominantly. So no doubt it's a higher bar. It will be more time consuming for both the report preparers and the assurance providers, and therefore there are cost implications. But there is no doubt that on a plus side, the integrity and the accuracy of the reported information will be held to higher scrutiny, and therefore will continue to evolve towards accuracy as we go forward.
John, as I
Julia.
said,
That answers.
people should have a look at the ABN AMRO 2020 integrated report, because as I said, they put a toe in the water on reasonable assurance, on the materiality determination process. Interesting precedent.
Yep. And a further question for Dale, and maybe forgot to just maybe between Liz and Emma and Nicholas, you might like to contemplate this question, and this is the issues around how integrated reporting has evolved to communicate both the good news, more particularly the bad news, perhaps expressed in terms around value erosion and impact, and how you see this evolving in terms of achieving better practice through perhaps materiality assessments, and how we're actually going to drive corporate reporting in that direction.
Okay.
That's a good question, John. Do you want to go first, Liz, or
sure. I was just going to mention, as I said in my presentation, it's always been clear within the framework, or the intention has always been there, that companies report on instances not only of value creation, but also preservation and erosion. But as I mentioned, we've made that more explicit throughout the framework. So we have always encouraged that balance of reporting. But to go to the points that Julia was making when talking about assurance, there is so much information available, not just from within a company, but also external to that company. I think the pressure is really on now for companies to ensure that they are being transparent about their own performance, because if they're not, they are bound to be found out. But I think it is becoming more accepted, and I think particularly in light of COVID-19, we know definitely in the last 12 months that things haven't been rosy around the world. So there will, I think, be an expectation this year that there will be more balance. And I actually think that's a great thing, because hopefully it will encourage that transparent attitude towards reporting going forward. So it could be a bit of a silver lining to the global pandemic, I think.
Thank you. Nicholas, any thoughts?
Yeah, thanks, John. We probably didn't touch enough on balance in our presentation between Emma and myself. It's actually probably one of the harder parts of the whole reporting cycle and making sure that you're in line with the framework. And I don't think from CPA's perspective, it's not because people want to intentionally be not balanced. I think there's human beings overwhelmingly look at the positive rather than look at the negative. So it is a hard thing for people to think about, well, how did we did this and this was great, but what did we do that wasn't so good? And we need a report on that too. And so what we've found in our preparation of the report is we need to kind of have a champion for balance, and that champion's Emma. I help her out as well, but it's ultimately her saying, well, I understand the business and I understand what's happened over the last 12 months. And I know there's been some challenges here and there's been some real great outcomes here. It's how do I bring that story together in a way that readers understand how we've gone about creating the value and what have we impacted potentially in doing that. So I think you do need to have somebody who's part of the process that kind of questions the stakeholders. He's happy to say to another executive, well, you may have overlooked that issue that we had earlier in the year. I think we need a report on that. So I think that's how we do it internally, is kind of push back and challenge, just to make sure that we get the balances in the report. And then obviously, Julia will come along and question us too on, could it all be this good? I think that's key to the process as well.
I think from my sort of perspective of having or needing to go out and challenge the business when we know there's perhaps something else we could be including, this is where having the support of the board and the executive is really important. So I know that I can push back, and I know that if I'm going to whether it's to the board or Nicholas and I are going to the board or the executive with a report that's got gaps in it, they're going to ask. So yeah, that to me is a really critical piece, that that you can challenge the business to report in a balanced manner.
Yeah, and I think it's important to emphasise that it is the capacity to tell the corporate story, but in doing so, recognise that it is no longer part of pure reputation management. It's very much about being able to communicate in a holistic sense the value proposition, positive and negative, of the business. We are. Yeah.
I might also add, I think the encouragement to look to the longer term, that is brought about by the integrated reporting framework is also something that can help with balance, so that companies might talk about the negative impact of capital expenditure for a longer term program, but they can more clearly set out the pathway that they're following to generate value over the longer term. So I think that's another positive aspect of the framework.
Yeah, and I think that's probably a bit of a segue into a question I'd like to pose to both yourself, Liz, and Michael to a degree. And this is where you see the future direction of both narrative disclosures such as OFRs in Australia, strategic reports in the UK, the broad stream of management commentary, which has a degree of regulatory backing to it. Where do you see the future of those pillars of corporate reporting, both from their part of the reporting architecture and in terms of what's happening on the assurance front?
Well, I think we're definitely seeing convergence there. If we look at the UK and their requirement for strategic reporting, that is already very much in alignment with the integrated reporting framework. So I think they are certainly coming together. The IIRC is involved in the management commentary project through our Chief Technical Officer, so a lot of similarity, and I would expect that to continue into the future.
Yeah.
Michael, anything to add?
You're on mute, Michael.
I think we've thought for a long time that the OFR is an ideal vehicle in Australia to apply the integrated reporting framework. And now, with SASB standards to strengthen it. To that end, Bill Edge as chair of the FRC, John Stanhope as chair of the BRLF, and myself have this year met with the Assistant Federal Treasurer and Treasury to be having the discussion about what's happening by way of convergence around the world and what are the potential implications for that. And inevitably, that discussion comes around to implementation and the OFR inevitably comes up. I just think that it would be an ideal vehicle to be applying this framework with standards. And I also believe it will be an ideal basis for boards of directors to write their adoption, their application of the new corporate governance recommendation 4.3. They should be thinking about that right now, because in June reporting, they've got to report against 4.3, and that's what processes have been put in place to ensure the integrity of all corporate reports. And very specifically, that includes the OFR.
Yeah, so Julia, would you care to comment on how that change in the corporate governance principles and recommendations have influenced practice?
John, I think the practice is very much evolving. I mean, we have seen reporting on non-financial information for a number of years, and we see people are leaning into the space of whether it's sustainability reporting or integrated reporting more and more as investors very much demand that, and as regulation and soft regulation in Australia, but corporate governance principles, APRA's guide for climate disclosures and the like are stepping into the scene. So I think there is more and more information that's more fulsome and holistic that's appearing in the OFRs, and certainly the journey towards implementation of at least the integrated reporting frameworks is very much continuing, and transition towards the fuller framework is very much continuing. I think it's brilliant to see, and assurance is also following suit. We have been doing assurance over sustainability reporting for a very long time. Michael did show 8 or so examples and several examples of Australian reporters, and there will be more as, again, investors demand this information, and boards want to make sure that that information has the same rigour and same accuracy as the information presented in the financial statements.
Thank you. And probably this is one for Liz, if you could follow up on. We are getting a couple of questions about where organisations who are starting on the integrated reporting journey can go to see best practice examples from both Australian organisations and overseas companies?
Yep.
I might answer that initially, if that's okay. The IIRC has an examples database.
Yep.
I've found that really useful. So I go to that often, and particularly when we started out going, well, I know we need to work on our business model. Who's got a good business model? So I would definitely recommend that. And I think also the reports that Michael had in his presentation, you know, your AB and AMROs, they're also good places to start. CBUS.
So thank you. It's good. It is a very valuable resource, and it's laid out in a way which readily accessible. If you're looking for a particular theme or part of the framework that you're wanting to get up to speed on, yeah, it is really an excellent resource. Again, probably a question between, I suppose, Michael and my colleagues at CPA Australia, and this. And you know, we've touched on it across the presentation, and this is the linkage between integrated reporting and its foundation in integrated thinking. And you know, probably from a CPA's perspective, how that has reshaped some of our business practices, and where maybe, Mike, you see the future.
Thanks, John. It's fair to say that sometimes businesses might approach this as well, we're going to do integrated reporting, when fundamentally what IR is looking for is integrated thinking, and reporting is an outcome of that. And there's kind of this push-pull relationship that goes on to try and get businesses, I think, from, well, we're going to report because we see the value of reporting, and by doing that, then we have to actually think more about our business and how we create value and who that value is for. So I think from our perspective, it kind of really goes back to the materiality piece and understanding who our stakeholders are. And they're not just members. You know, staff are your stakeholders, suppliers are your stakeholders, regulatory bodies are our stakeholders, as well as members. So it's very much clearly understanding who they are and what's material to them, and then having a think about that concept and what you've got through that process when you are over in the other part of your business and you're thinking about strategy. And what is our strategy going to deliver, and how is it going to create value for the people that it's material for, which the materiality process has done. We've also spent a lot of time understanding through third-party research what's important to our members. So all of these things that we've done over the last 4 years have really played deeply into, well, how do we create value, who are we creating it for, and how have we measured? And the measurement piece is really important. So we have some KPIs, we report on in the report, they're in my performance plan, they're in the rest of the executive performance plan, you know, they're even cascades right down into staff. So it does change the way you look at making decisions, and they're made with a value lens. So I think you know, whichever way you come at it, that's where you're going to end up, and you're going to end up having to think that way, because you know, to tell the story in your report under the framework, you need to be doing that.
And I think, you know, it's been mentioned several times that integrated reporting is a journey, and you know, integrated thinking for some organisations maybe as well. But I think it would be very hard to do good integrated report, you know, very hard if not impossible, if you don't have integrated thinking in place, because the information just won't be available.
Yep.
John, two comments from me. Number one, as these journeys continue and integrated reporting gets more sophisticated in organisations, many people are now asking, what is this integrated thinking thing? How do I actually embrace it if I'm not? How do I improve what I've got? And so you would have seen from what I said up front that one of the 3 products of the Value Reporting Foundation is in fact integrated thinking principles. So a lot of work's going on that. And number 2, it's always fascinating to hear David Atkin, the former CEO of CBUS, tell the integrated thinking story. He does it really well. He said, we started on integrated reporting because we wanted to ask the companies in which we invest to provide more strategic information, integrated reports. So we thought we'd better do it ourselves, and we did. And what we found is it wasn't so much about reporting. It was about the business. It was about integrated thinking. And he uses phrases such as, oh, it straightened up our strategic thinking. It better aligned our business processes. And so that's how he often tells the story.
Yeah, I think, it's fair, we probably haven't touched on this terribly much, but, if you look at integrated thinking very much from the perspective, it does, I would expect, give a better clarity about understanding where your business sits in a bigger value chain. So, yeah. Look, I regret to say that we are pushing up hard against our allocated time. Probably just give a final opportunity if we could go around our virtual table of panellists and maybe just get a final concluding comment, if I could, please. So firstly, Liz.
Thank you very much. Just in terms of the revised framework, just stressing how much those changes that have been implemented are very much based on market feedback. So users telling us how the framework could be improved. And I do encourage you to look at not only CPA Australia's report, which has been prepared in accordance with the revised framework, but Nedbank as well. They're the two examples that we know of at this point, prepared in accordance with the revised framework, but they will for certain be more coming out. And we've mentioned the integrated reporting examples database. Not only does that have extracts of particular aspects of reporting, but you can also find award-winning reports on the database as well. So I would encourage you to use the resources available. Thanks, John.
Great. Thank you, Liz. Michael.
I'd just like everyone on the webinar to be confident in your ability to deliver integrated reporting assurance now, not in the future. There is guidance. There's a number of precedents out there to have a look at, and there's plenty of people to talk to, Julia being one of them, of course.
Yep, certainly support that, Michael. Thank you. Nicholas and Emma.
Thanks, John. I suppose my point would be, if you're thinking about starting, you probably just need to start. And so it's one of those things that you've got to get into it and understand, what are my gaps? If I want to do this, well, what do I have and what do I don't have? Utilise the resources available. But yeah, it is. It's about starting and making that step towards doing it is often the hardest part. And once you do deliver your first one, then you're iterating, right? You can build on what you've got and improve, and before you know it, you're one of the leaders in integrated reporting. So that would be my comments, Emma.
Yeah. I think I obviously talked a bit about the challenges as a preparer and talked about, data robustness and not people who aren't from a financial background sort of understanding what's required for assurance and good data. This is where I think accountants are really well placed. So your finance team is the perfect place to look for people who can help non-financial people understand what good, robust data is. I'm myself not an accountant by background, and certainly I know if I'm having issues with some of the data, I'm talking to the rest of the finance team. So yeah, I think accountants are really well placed to play a role in helping people get to integrate.
Yeah, and I'm glad you've added that, Emma. And I suspect, I'm confident that that's one of the reasons why we've gone on this journey to actually prove that accountants have a pivotal role to play in these developments. So thank you. And that leaves, before I throw back to Joelle, Julia, your final word.
Just very briefly, I would say don't let perfect stand in the way of good. I echo Nicholas's call to action. Start and also engage early with your board, with your executive and with your assurance providers.
Okay. Thank you all. And back to you, Joelle.
Great. Thanks, John. And thank you everyone for your participation today. In the next 3 working days, you'll receive an evaluation survey accompanied by the recording of this webinar. We really appreciate your feedback as it is extremely valuable to help us deliver better events for you. Thanks again, and we look forward to welcoming you again to another CPA webinar.
Thank you.
Thank you.
Thank you.